Hey everybody, this is Jim at SP500chart.com. It is 4:08 on March 25th, 2014, and we're going to take a look at the S&P 500 chart after I read this to you. I'm going to see if I can do it in a breath. The website in this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. You know, that's the easiest I've done that in one breath in a long time. But now let's do the important thing and look at the chart. Just a brief recap. Coming into today, we were looking at a couple of things. We were looking at the possibility of, I wish I could turn off that that little data box down there, but anyway, I don't know how to do it. It might not be able to be done, so bear with it. The idea was yesterday was getting over this line that I just highlighted right here. Was that indicative of this being a bottom? Okay? Or were we going to see a bear flag form between these two lines right here, which would take us down today? And we sort of, you know, as I guess luck would have it, we get the kind of semi-ambiguous feel about this. We are above this line. We stayed above the line. Matter of fact, the low that we saw today was not that much lower than the last level when we back tested this line. So that's I think mildly bullish. But as you can see, shortly before lunch, we got underneath this rising line, and for the most part, stayed underneath it. So we've kind of got this little ambiguous thing going on here. The good news is we are once again inside and just barely over this little light colored orange line. I mentioned this yesterday that we made this a little lighter because the way we kind of went through it yesterday sort of made me feel as if this line maybe was not as important as I thought, that probably what is more important in the way of support is down here around somewhere between 1840 and 1850. And again, that's a little fuzzy. Got a nice bounce on 1850 yesterday, got a nice bounce on 1850 on the 19th, but still the reasons for expecting support down here are not as well lined up as those last two bounces. So I'm going to keep that as a support range. Now, as we look at the chart today, again, up by a little bit less than 0.5%. I would really still think, would really like to see us take out 1884. Until we do so, there remains a bearish possibility for what we've seen over the past 6 or 7 days. And that bearish possibility, and actually we could take it back a little bit more than 6 or 7 days, but that's really what I think I'm going to leave it at that. The bearish possibility is that we are forming a head and shoulders continuation pattern here, that as we came down off of this 1884-ish, 1883-ish level back in early March, we attack that level again in, about a week and a half later. Now we've formed, and again, I'm not saying this is what we see, this is going to happen, but this is a possibility. Now we've formed a head and shoulders pattern here. We're in the process of forming the right shoulder. If that rolls over and then plows through this level right here, then we are in for a spell of selling. The bullish possibility is the fact well, not the fact, is the interpretation that we are still dealing with a inverted head and shoulders pattern back here, and that all that we've been seeing here for the past couple of weeks has been sort of a struggle, if you will, to get up to that target level around 1958, and the need the market feels to test support between 1840 and 1850. Now I have I have a channel on this chart, these red lines right here. That is also another potential support line, but I remind you, as you look at this bottom line here, we've only got one touch. This line is here only because it is the complementary parallel line to a well-established resistance line up here. We know that the S&P and the markets in general like to run in parallel channels. So anytime we can establish a establish a good trend line, and we know we have a major point of technical interest, it's often a good idea just to stick that line up there to see if we come back to it, do we get a bounce? So we end the day in a little bit better position than we ended yesterday, to be sure. And I would really like to see this move continue up and reattack 1884, which is only about 18 points above us. Now it's roughly 1% above us. The other thing that may be a little bit of a bullish indicator here, slightly, and I think we can throw this line up there. Let's just put it there. That maybe we've got a little inverted pattern working right here. Interesting to note, for a long time we were seeing inverted head and shoulders patterns with almost no right shoulder. And if this is one, well, we've got a deeper right shoulder than we do a left shoulder. If we back out on this chart, and if this ends up being an inverted head and shoulders pattern, we have a deeper right shoulder than we have a left shoulder. So maybe that's maybe that is broadcasting to us that there's a little bit of a change taking place in the psychology of the market right now. Maybe we're starting to see a little bit more caution. Maybe that's due to the fundamentals of what's going on over in Eastern Europe. That's possible. Or it could be that people are just a little bit more willing to take profits on returning to a resistance level. So I think that may be worth noting. But at least for now, this pattern is still a very distinct possibility. This little pattern here is also a distinct possibility, and of course our larger pattern that does not have that deeper right shoulder is also still, as long as we're over that 1840 to 1850 line, you have to say this pattern is still alive and kicking. So guys, there's your video for March 25th, 2014. Thank you for taking time out of your day to watch this, and thank you especially for your very kind support. Take care.